Fintech, the millennial way of banking, fast become one of the big buzzwords in business and technology. It's one of the hottest properties to invest in, and you can be sure it's only going to get bigger and bigger. But stick with us until the end, and you'll see how a lot of people have no idea what the word fintech even means. You don't need a degree in computer science or finance to figure out it's an abbreviation for financial technology. But when it comes to fintech, whether you're in the dark or well clued up, we thought we'd shed a bit more light on this hot topic. Number one, traditional banks are worried about fintech, and with good reason. That's because until a few years ago, banks had a tight hold on pretty much anything we did involving money. And being the huge bloated dinosaurs that banks are, there wasn't exactly much incentive for them to innovate or be competitive in the last decade. An innovation expert at FinTech, VC Aravind Sankara put it, we are witnessing the creative destruction of financial services, rearranging itself around the consumer who does this in the most relevant and exciting way using data and digital wins. So, the more you see the word fintech cropping up in your news feeds, you can be sure the more headaches old fashioned bank managers are getting. Number two, the term includes sectors you probably didn't think fintech, and as each fintech tends to specialize in just one area, they focus on doing it a way that's efficient and streamlined and as user friendly as possible on digital interface and at a low cost to the consumer. That includes platforms that are fairly obviously fintech like platforms that lets you make payments online or in stores Square or PayPal platforms that let you trade stocks like eToro or Robinhood and anything digital you use to apply for a loan. The fintech label also include cryptocurrencies and the crypto trading platform Coinbase and the so-called neobanks like Chime Transfers or Revolut. But there are many other players you may already be familiar with but hadn't thought of as a fintech. Crowdfunding is also considered fintech. GoFundMe, Kickstarter, and crowdfunding are also fintech. And that's fintech specifically for Medicare. One example is Oscar, an American health insurance company that uses it to shake up the healthcare system, making it easier and more transparent to make medical claims, all at a reasonable cost. Number three, it's lifted millions of people out of extreme poverty. One thing that fintech does a great job is bringing financial services to people who couldn't access them before. In case in point is M-Pesa. It allows users to make and receive payments securely, make online deposits and all. And it gets credit for having reduced crime in a society that used to be mostly cash backed and prone to that. In fact, M-Pesa was launched in 2007. It's raised 2% of Kenyans and around 200,000 households out of poverty, as well as many other people in different countries throughout Africa where it's also used. And we think that all of this means fintech deserves some serious kudos. Number four, it's revolutionizing the loan market. Now, it's possible to find a whole range of apps and websites that help you compare prices of credit card loans in a way that banks didn't used to do that. That includes peer-to-peer lending platforms like Prosper Marketplace and lending club sites for business loans like Cabbage and Lendio, and fintech that lets you apply for mortgages, which take traditional brokers out of the equation and approve loans faster. And in 2016, American fintech Sophie, which helps with student loan refinancing, became the first online lender to get a AAA credit rating. Number 5. They could make traditional credit ratings obsolete. Anybody who's ever taken out a loan knows how credit rating is the holy grail when it comes to being able to access money. A bad credit score shuts off all kinds of opportunities and it's difficult to shake off. Thanks to the fintech lenders like a firm which offers loan to people with bad or no credit ratings and also helps them build up their credit rating or upstart, which uses different data than usual, like employment history to determine how creditworthy you are. And all this means that soon enough, we could be seeing the end of credit ratings as we know them. Number 6. Cybersecurity is still a big concern. Of course, it comes with the nature of fintech. Companies that they could hold huge amounts of sensitive data. And there are high risks if all of that gets stolen. And along with of all of the good news around fintech, it's worth noting it's not all rosy and we do need to be careful. Figures from last year show that 27% of fintech companies have experienced a security incident and 29% aren't sure because they haven't checked. With more investment and more transactions being made through fintech, this is likely to improve in the future. But it still shows how seriously we should be taking cybersecurity. Make sure you have yourself covered when it comes to online security and to make the smart choice. Number 7. Investment in fintech is going up exponentially. So many movers and shakers of the last decade being fintech. This one shouldn't come as much of a surprise as over 300 billion has been invested in fintech in the past decade. According to Goldman Sachs, the market worth of all fintech firms is 4.7 trillion. That includes investment made by big tech firms into their platforms like Apple Pay and Google Wallet, as well as financing that has been secured by a large number of startups, which is about 12,000 fintech startups across the world. Number 8. The word fintech originally described the back-end technologies of traditional banks. The first recorded use of fintech goes back a lot further to 1971. It was originally used to describe the back-end technology used by banks, financial institutions. Kind of ironic saying how we use it to talk about their competition. And the first fintech that went global, as we all knew, was, PayPal, which was launched in 1998 by one of our favorite people here at Lux, Elon Musk. It wasn't until quite a bit later the term fintech was used more widely. Number 9. It's huge user of machine learning. As a fintech offers cutting-edge products, it stands to reason why they use the most cutting-edge new technologies and are some of the biggest users of them, and none more than machine learning and artificial intelligence. One of fintech's most famous users of AI is the so-called robo-advisors. Now sure, they may sound like armor-clad law enforcement agents from a dystopian future, but the word refers to algorithms that automate investment advice, and basically they do the same job as financial advisors but a lower cost. And another way fintech companies use AI is in their cybersecurity to fight online fraud. They do this with computer programs that use information about your payment history to flag up transactions that are from outside of the norm. Number 10. Fintech uses all kinds of new technologies like chatbots, which assist customers with basic tasks and cut down staffing costs, or an area called predictive behavior analytics, used in car insurance apps like Root Insurance, and of course, blockchain, which was developed specifically to record transactions of Bitcoin and is closely connected with one of the most talked about areas of fintech, crypto. They can improve your spending decisions in case you are one of the people who finds it difficult to make the right decisions when it comes to money. We got good news for you. It could be fintech that saves the day. That's because one area of fintechs that's been getting a lot of users are personal finance apps. With apps like Mint Money, Dashboard, and Credit Karma, you can use budgeting functions to help you spend less and hit your savings goals. And some apps use gamification to add some fun into saving, which is not usually known as having fun, and a lot of research shows that they might actually work and help people save more money and feel more satisfied with their spending decisions.